Welcome to Money Convos, where we discuss personal finance and investment tips. We're committed to helping people create wealth and achieve financial freedom. Follow us on Twitter, Instagram, Clubhouse, and Facebook, and subscribe to our YouTube and podcast. All right then, let's head into today's conversation.
Hi everyone, welcome to today's conversation. We are great. Hi Sarah, how you doing?
Hi, Alikem. I'm fine, thank you. How about you?
I'm great. How's your week going?
It started off very. You can tell from my side. It started off very, very busy, but I think as the week, I love Fridays. I just take things slow on Fridays. So as the weekend approaches, things seem to be calming down.
I wish my week was listening to you, and then my week would just also be calming down as time is going. I know, stubborn week.
How about your week?
Anyway, Charlie, it's been very tight, and I'm not even helping myself. I'm only making it tighter and tighter, calling me to schedule meetings and giving ourselves to dos. Or anami me.
No. Hello, everyone.
Hi, Mimi.
Hi, Mimi. And hello to the people in the background.
Hello, Mimi.
I know, right? The
Sarah,
choristers.
Everybody downstairs. Hello.
Hi, David. How you doing?
I'm awesome, man. A little sleepy, but I'm okay.
I was going to ask what's happening to your energy level.
It's very low, man. I didn't have my morning coffee today.
Okay. Do you take your coffee black or with some cream and sugar?
So I used to do it a quarter cream, 3/4 coffee. But lately I've been going 100% black with a dash of lemon juice.
Okay. Interesting. A dash
Somebody
of lemon.
told me that's good. So I make my coffee and then I'll just squeeze half of a lemon in it, put a little bit of sugar, and that's it. It tastes horrible, but I don't even know why I'm doing it.
Okay. Interesting. Anyway, welcome everyone. Before I even introduce this thing, of course, housekeeping is a recorded session, and I just want to mention something that's interesting that's happening today. My WhatsApp is blowing up. So there's this Twitter, there's this account on Twitter, StatsGhana, that's GH on Twitter, where they share data and information about the Ghanaian economy. And I got in touch with this person some time back. I made a correction to something he said, and we had struck up a good rapport. They contact me every now and then if people have questions about the stock exchange and investing. And today he posted something. I probably should share this tweet. He posted that people are making money on the Ghana Stock Exchange and it gets talked about less. He said that 1,000 cedis invested in farm milk in January 2021 became 3,700 cedis. And in my own words, at the end of the year, that's a 270% rise. Benso Palm did 233%, Guinness did 100%, EcoBank did 75%. And in response, people are hitting him up in the DM. He's forwarding them to me. Man, it's been a roller coaster of a day on top of what it already was. So it's I directed some people to join in this conversation to hear what we are going to talk about, because we will touch on shares at a point. So it's a good opportunity, just good timing for us to have this conversation. And so I'm looking for us to having this conversation. If anyone is joining in because you came through Twitter, you heard this from Twitter, welcome, and I hope you benefit from the conversation. We won't talk only about shares, though. We'll talk about the various simple investments. I say simple, what Sarah and I would call, and David would be calling traditional investments, right? But we'll go through each of them and give you some understanding about it so that before you make that decision to buy any shares because you've had Farm Milk did 270%, Guinness 100%, Bob did, Bensu did 233%. Before you jump in there, you should have some good understanding of what's going on there, what risk is involved, and the opportunity you can make in terms of return. So, without much ado about it, I will head into today's conversation. Mimi, are you taking a backstage today too?
Ellie here, my day, I did.
Okay, good. I think because you've been silent, the Clubhouse algorithm detects who is more active. So when we do the ad, I've realized that no matter where I position you among the hosts, your picture is not coming on the front. So please start talking more again so that the Clubhouse algorithms will put your face up on the ads.
Well noted.
Okay, all right. So, David, Sayram, you know what we are talking about. Any introductory thoughts before we delve into the specifics? Who would like to go first? I guess ladies first. Sayram.
Hi. Yes, it was hearing you speak about the stock exchange. It was really amazing last year. I think we underestimate. I don't think we give the exchange too much credit. You hear lots of people wanting to invest in stocks, on global stocks and whatnot, but our local exchange too is doing something. So it was pretty exciting hear you speak about that. It's going to be an interesting conversation today. As you said, we're going to talk about these traditional, simple investments that everybody can do. These are conversations I wish I had when I was probably in high school, or in fact, yes, when I was probably in high school. Then I'm sure I would have taken advantage of some of the opportunities available.
Great. I learned this stuff in even in university, but apart from treasury bills, I was just doing the plain vanilla. So I wish people would have more of these conversations with us. I guess I did different types of investments, multi-level marketing and stuff. Anyway, so yeah, I can relate to you, Sayram. Okay, David, how about you?
So hearing you talk about what the Ghana Stock Exchange has been doing has gotten me very excited because I have some stuff be in FNC, cow brokerage that I haven't even taken a look at in years. I hope they haven't locked it up somewhere that I don't have access to it. But I need to call my people over there and see what is happening. That excites me actually because I think about 5 years ago I wanted to start doing something in Ghana. So I went over there and I gave them a few dollars to start buying me stuff. I wanted to be an active trader, but unfortunately, we hadn't caught up to the whole, day trading. The brokerage companies hadn't caught up to that yet. And even when they finally went online and gave me my account information, the time difference wasn't really helping me much. So I'm very curious to know more about what's happening on the Ghana Stock Exchange. Besides that, the usual, the stocks, the bonds, the mutual funds, the treasuries, those type of things we're all doing. So I want to know more about what's happening in Ghana right now. Seems exciting.
Alrighty. David wants to know what's hot. What's going on. Then a walk room. Okay, all right. So before we even get into the types, David started mentioning some treasury bills and the likes. Let's first define an investment. So, Sarah, in your own words, what would you call an investment?
An investment, in my opinion, is putting money into something with the expectation of getting a return. So I don't expect to put, let's say money, I don't expect to put 100 cedis down and just end up with 100 cedis. I would invest 100 cedis hoping to get 100 cedis plus something. Also, it could be your time. I would invest my time in something hoping to reap the benefit. So investment generally to me is putting effort or money, a resource in the hopes of an intended return.
Okay. All right. So you put in money with the hope of getting your money back plus a little bit extra or a lot more extra.
Definitely. A lot more extra.
Yeah. Okay. David and Mimi, do you have any alternative definitions or something you add?
No, not for me. It'll just be the same thing, but in my own words. So yeah.
Yeah, so let me just add. So normally when we are looking for the people invest with the hope that whatever they are investing in would either appreciate in value or bring them some sort of income. So that's just to add.
Yeah, that's a good angle to it. Sarah, you wanted to say something?
Oh, no, no, sorry.
Okay, yeah. So yeah, it's a good angle you brought in there. So how, when we say you get a little extra, how do you get that extra? You get income from it. It's like you lend your money to someone and then every month they'll be paying you something back as interest or capital appreciation. Their value goes up. So it's a good point. And delving into the types of investments, I think people appreciate the income side of investments more than they appreciate the capital appreciation part of investments. But we understand this with when we buy land. But when we buy shares, we don't understand that one. So we'll get into it. So let's talk about the simple investments we can do. What is the simplest investment anyone can do? Say Ram.
The simplest investment that my grandmother does would say treasure bill.
Treasure
Is
bills, yeah.
it? She would say treasure bill. Well, treasury, what we all say treasury bill, I think it's one of the most popular investments that anyone would, it would be the first that comes to mind when you ask someone for an investment. And so a treasury bill is I basically giving money, lending money to government. So government comes to borrow money from you, and then you lend money to government for government to use for its short term or its as its working capital. So that's just the essence of the treasury bill. You lend money to government, and then in return, you are given some interest rate. So, for instance, if current treasury bill is so the treasury bills too are it's for a period. So there's a 91 day. You can do it for 364 1 year. You can do it for 6 months. So there's an interest rate that is quoted. So for instance, currently 182 day treasury bill is around 13%. What does that mean? You give your money to government. At the end of the 6 months, you get 6 months worth of the 13%. So I think in simple terms, that will be what treasury bill is. I don't know if others will add to it.
Yeah, I think Mimi would add to it. Mimi, is that what you also consider the simplest investment you can do?
For me, no.
Hey, eh. Then
I
Mimi,
said,
just a second before we take your own. Let's see. Another angle to this, or another point on treasury bill being the simplest. David, did you want to add on to that?
No, I agree with that. It could be a treasury bill, it could be a municipal bond, or corporate bonds can be a bit risky at times, but T bills or even a CD could be, yeah, those are very simple.
Oh, okay. All right. Thank you. Then let's now hear from Mimi. Mimi thinks something else is simpler than treasury bills. Mimi, what's it gonna be? What's
Maybe
simpler
besides
than
putting your
treasury
money
bills?
under your pillow.
Yes, and
I
digging
don't
the
think
hole
I've
in the
ever
ground.
done that yet. Anyway, so I was trying to remember what my first investment was, whether it was treasury bill, but it was mutual funds,
Mimi Roboa,
and I started.
it was a
Oh,
susu box.
Wow.
yeah, I started mutual funds in GSS actually when it wasn't
Mimi.
popular.
Who knew about this stuff?
Yeah, so mine was the then it was called the HFC Unit Trust. So every time I go to the bank to go and make a withdrawal, every time I get, are you sure this is your number? Because when they look at the face and the number, it doesn't tally. What were you doing with this number at that time? Anyway, so for me, it's a mutual fund. And mutual funds, because first of all, you need you don't need much to start. Some would allow you to contribute as low as 20 Ghana cedis, 5 cedis, to start. So, and I think it's very simple. I mean, you just fill the forms. If the company has direct debit forms, that is it. They do the rollover and everything. So you don't have to think about anything. So for me, I'll go rather with mutual funds. And when I say mutual funds, or let me say collective investment, it's basically a pool of funds. So Ajwa has 100, Akwesi has 1,000, Amma has 5,000. It's pooled together and used to invest in different investments, or let me say different assets, based on what the mutual fund type of mutual fund it is. So we have fixed income mutual funds. That means they'll be investing more in fixed income assets. We have equity mutual funds, which will have a chunk of the funds invested in equity. We have, and these are indirect investment. You are not going directly to the market. So if you're an amateur investor and you want to see, how the whole thing works, you can start with a mutual fund, putting a little of your skin in the game. And as you grow horns, you can graduate to the more direct investments.
Wow. Mimi learned the strategy long ago. She's a pro, a veteran in the game. Okay, all right. So I guess we have two already that we are thinking about: treasury bills and mutual funds. I guess perhaps I should rephrase the question then. When we look at investments, or I'm explaining to clients, I speak about investments in a certain spectrum, from safest to the riskiest type of investments. And let me also give you the context. When we say simple investments, I believe we are talking about investments that you can walk into any bank or any licensed financial institution. I take that again. Any bank or any licensed financial institution. Okay. Don't just go to somebody who says they do money matter and then say it's an investment. No, that's not what we are talking about. An institution that you know that, okay, this is set up, there are people watching over them and making sure that they are not misbehaving. So let's go through the types of investments per the spectrum, right? Safe investments, or the safest possible investments. We will start from treasury bills, which we've explained, right? But Sarah, is it possible for an investment to be 100% safe?
I personally don't think so, because yes, Treasury bill is backed by the credit capability of government, but there have been some instances where government has defaulted. Some governments have defaulted, so I wouldn't say an investment is 100% risk free, but um, it's usually unlikely for the government to default. So yes, it's just rather low risk than 100% risk free, in my opinion.
Great. So countries like Argentina.
Yes, I think Greece as well. Yeah.
And with Argentina, I think it was Argentina, there was a time many years ago when, because they defaulted on their bonds, one of their naval vessels came to dock in Ghana for some reason, and we seized it, or we didn't let them move. Do you remember that scenario?
Oh no, no, no. This sounds new to me. No.
Oh, it's serious matter. It was a very serious matter. We said we won't let their ship leave. Why? Because the bondholders had the people who please, sorry, pardon me for using that term. Yes, the people who had invested with the Argentine government and they weren't paid back yet, or they had delayed paying them back, requested that we hold on to their ship as sort of like season collateral or something like that. There was a bit of kerfuffle for a few days, but I think eventually they left, so everything was fine. So Sarah was talking about what makes even the investing with the government not so safe, right? I'll add on to, fine, if it's not 100% safe, at least why do we consider it the safest investment Because, like Sarah said, it has the full force of the government. And what can the government do? The government can raise taxes. So if the government doesn't have money, they will just come up with a new tax. Hashtag, you know what? I don't want to see it just yet. I'll let someone else see it. But you know the taxes that they can bring up at any point, and by force, everyone has to pay. Or if you don't pay, you face fines and even pay them more or go to jail. So they have that force as the government to raise money that they can pay back. Then there's this to use simple things. They can just print the money and give it to you, right? But in this day and age, it's more like you write ones and zeros and credit accounts. So there's that. Sarah, are there any other reasons why we consider the government safer besides the taxing power and the printing money?
I think I don't have anything to add to what you just said for now.
Great. Okay, great. So then we talk about treasury bills. Mimi, what are the different types of treasury bills we have? Okay, I'm sure the choristers are saying it.
The 91 day, 182 day, the 1 year notes, etc. So those are some of the ones. Unless you mean something else.
Oh yeah, that's it. And Mimi is Mimi, you are still a veteran. You are calling it the 1 year notes. It's no more the 1 year notes. It's the 365 day bill.
Hey.
Elegant. It's 364. 364 day bill.
Yeah, simple.
Marasha Kuti. Okay, Sarah. Okay, thank you for that. 364 day bill.
Yeah.
Okay.
So those are the options that are available. I think Sarah was trying to explain how the interest is calculated. I think people still make the mistake of thinking that when you buy a 91 day treasury bill and they say maybe let's say 13%, that in 3 months you're going to get 13%. It basically means you have to divide what do you call it, 3 by 12, or let me say 1/4 times the interest rate to get what you'll be accruing on your money when it's paid. But normally it's discounted. So I'm sure Elikem would explain that.
Yes, and so it's discounted, but depending on your financial institution, they can rework the math for you so that you wouldn't worry about the discounting, about whether it's discounted or not. They can quote an interest rate for you, so that part is not too worrisome. Just look out for the interest rate in case you hear someone talking about a discount rate. What you are most interested in is the interest rate. What is the interest rate? And the interest rates are usually quoted per annum. That's for a full year. So like Mimi was saying, if you are doing a treasury bill for 91 days, let's say 1,000 cedis, and let's assume interest rate is 20%. Just for simplicity, that's not a real one, but just for simplicity, is 20%. 91 days, that's 3 months. And 3 months is a quarter of a year. So you take that 20% and you find a quarter of it, that is 5%. And 5% times your 1,000 cedis, that is 50 cedis. Okay. Ooh. Thank you, Sarah. My math was about to. So 50 cedis. So you, at the end of the 3 months, you get 1,000 cedis plus your 50 cedis. So you walk out with 1,050. So that's how it works. If it's 6 months that you choose, you'll get then at the end of the 6 months you get 1,100 on top of your 1,100 as your maturity amount. That's the term, the maturity amount. So Sarah, when a treasury bill matures, what can an investor do, or what should they do? Should they take their money and go home?
So it actually depends on the person's investment objective. So if I was using my school fees for treasury bill, I was using part of my school fees for treasury bill when I was school. So what I would do, so at the end of when the investment matures, I would take it and then pay the fees and then pocket the difference. So it depends on the objective. If I don't need the money, then I could request for them to roll over meaning that reinvest the principal plus the interest that I have earned. So it depends on the reason why you went to do the investment.
Great. It depends on the reason why you went to do the investment. Maybe, chip in.
Yeah, so as Seyram said, if I was going to invest for my wedding, which is in 3 months, definitely I'll take the money. But if you're looking at compound interest and you're looking at investing in the long term, it's very important that when the money comes, you don't like take the interest and say, oh, roll over the rest. And then you keep on doing that. It will never grow. So if you want to benefit from the compounding growth of the funds, you need to roll over both the principal and the interest to benefit from it.
Good points, Mimi. Very good point. And for this one too, you can even instruct when you are buying the treasury bill, or we say buying the treasury bill, right? But when you are doing the investments, let's put it in simple terms, you can instruct them always roll over with principal plus interest, so that you don't even have to worry. Automatically, you keep getting the compounding interests. Sarah, you wanted to say something?
Yeah, I just wanted to, just for the sake of those who don't know what the compound interest is, it's just a principle that means that you are investing your interest on interest. And so you are making money on them. So let's use this analogy, which I love to share. So you have a farmer who has a fowl, a chicken, a fowl, and then the fowl is your principal. The fowl lays an egg. The egg, so you have one fowl, one egg. Then you have two options. Either eat the egg, or allow the egg to equally hatch. If you allow the egg to hatch, that is the interest. The egg also hatches, it gets chicks. They grow, they equally also lay eggs, and those eggs also keep hatching for you. And so your farm or your chicken or your fowl keeps increasing. So that's the thing about compound interest. You start with your principal makes interest for you. You invest the principal and then the first interest. The first interest also gives you another interest. So you are always having your interest on interest.
Okay, interest on interest, right? And there's this analogy people use, using following on the farm analogy. Say, don't eat your chicks. Let them grow, and then what's it called? And then become big chickens for you too. Isn't that how they say it?
Yeah, something like that.
Okay, great. Welcome, Jennifer. We are, as you know, the topic already. We are talking about simple investments, and as you're also in the industry, we hope you'll be chipping in every now and then. So we are currently talking about treasury bills. To anyone who just joined, we are talking about simple investments you can start now. We are talking about treasury bills. They are considered some of the safest investments, because it's like you are lending money to the government, and governments can default. By default, it means sometimes they may miss paying back your money. So just remember all your friends who have borrowed from you and haven't paid back. That's what we are talking about, defaulting. It's possible, but it's rare, and they have the power to tax people to raise the money to give you anyway, or they can print the money to give to you, so you are less concerned than the next person. So speaking of investments you can start now, right? Let's say we've said this, and so far someone's like, you know what, I like T-bills, I want to do it. How do I do it? Um, Jennifer, let me put you on the spot. Though you just came. Where can someone buy a treasury bill investment?
Okay, thank you. Good evening, everybody. For treasury bill investments, we have a plethora of places you could buy them from. One of them are commercial banks, so universal banks. For an example, you can go to Ghana Commercial Bank and tell them that you want to do a T-bill investment. They will collect your money and then put together the funds and also go to Ghana government or Bank of Ghana to do treasury bill on your behalf. You can also go to let's say a brokerage company. I'll use Databank Brokerage Limited. Please forgive my background. I'll use Databank Brokerage Limited as an example. So you could walk to, let's say, Data Bank Brokerage Limited, and they are the wing of, let's say, an investment bank that buys or sells securities. So if you go there, they can buy or sell the security on your behalf. And yes, so then those are some of the two ways you can do it. The thing about Elikan, I just want to extend a bit here. So if you see
Sure.
that the government of Ghana is telling you that Treasury bill is 12.75%, chances are that if you go to any person to go and do the investment, you won't get the same amount of money, the same interest, because they have a spread that they take. They will take that from the BOG, and they'll give you something smaller. And the difference between that is their, let's say, what they are getting for doing business. Yeah. Thank you.
Good points you've made there. So sometimes you may see the government of Ghana quoting or the Bank of Ghana quoting a certain interest rate, but you may get a little less than it because some people are middlemen or middle people, and they are offering you that service. And that gives us the name in our industry, financial intermediaries. Banks and financial institutions are financial intermediaries. They help people who have money to invest, and they help people who need money to borrow. So they need to get paid for that service, right? Speaking of ways that your money you may not get the same thing you want. We've described the scenario where the investment matures. But when it doesn't mature, when, let's say, you need your money urgently, what would you do? They said 3 months, but it's been only 2 weeks, or it's been only 1 month. What do you need? What do I do in that case? Do I just go and chew bread while I wait, or what are my options? Mimi, you would like to take this? Okay, then Sayram, I think sometimes maybe Mimi's choristers are singing, so Sayram, please take this one.
Yeah, before I take that, I just wanted to add to Jennifer's point, that another place to get buy now we can do it on our phones. Actually, there are some banks. I think even MTN. Well, there's an option on the MTN mobile money space, so you can as well buy treasury bills now from the palm of your hand. So that also works.
Ooh, wait, hold on. Please don't run and leave us. Please repeat that. I think with the proliferation of mobile money, this may be a good point for people. Please take it again.
Yeah, so there are platforms, there are
Sayram.
banks, these are backed by banks. Yes, Jennifer, sorry.
Oh, I wanted to give Elikem
So
fans for proliferation, but please go ahead.
So there are platforms backed by banks, because as Mimi mentioned, banks and then license dealing, other financial houses you can buy treasury bill from them. But then when you go to on your mobile phone, I know I use MTN, so for that of MTN, if you go through the mobile money space *170, the options there's pensions and investments. So you can select investments, and then you have the opportunity to buy treasury bills with, I think, 5 cedis. With as little as 5 cedis, you can invest in treasury bills from your phone. I think this should be backed by a bank. I think EcoBank also. Yeah.
Yeah, it's true. I think it's backed by EcoBank. Yeah.
Yes. Okay. Did we just give EcoBank a free ad? They need to pay
Charlie.
us.
Right.
So about needing your money before it matures. So you can actually go to where you bought the security and then disinvest. So it will be rediscounted for you. So you don't necessarily have to go and chew bread, as Elikem said. You can go there, and then there's a rate that may be applied. Ideally, you would get back your principal plus a bit of the interest that has accrued, depending on the rate that is applied. So yes, they can rediscount the instrument for you. Hardly does it eat into your principal, but it's very possible.
Well, Sarah, I think there are times. Okay, So we call that discounting, right? There are times when people end up okay, may not go too much into the principle, but sometimes, especially if you come just like a week into it, chances are you are going to lose out on
Yeah, some of
part
the
of your,
principles. Yeah.
yeah. And it may seem like weird, but just think about it. You have gone to borrow, imagine you have gone to borrow money from someone. They are going to use it for business. You've planned. Then the person suddenly shows up and says, Pacho, music and farmer, like, please give me my money back, So, um, you have to incur some cost to try and fix the hole that the person is creating for you. So it's sort of compensation, and that's where one of the cons of T-bills come in. It's not so liquid. So, but we will get into the pros and cons in a bit after we've talked about other investments. Okay. Anything else on T-bills, please? Our big brother with the financial industry regulator. Is there anything we've not said about T-bills?
Very funny. No, 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 no. You guys, you're hammering all this stuff. I like the fact where you guys were mentioning, say, depending on how quickly you pull out, you're not realizing the whole rate that you're supposed to get, and there, in some cases, you can actually also lose a tiny little bit of your actual principal. So yeah, thanks. That's yeah. Everything's on point so far.
Okay. Great. Okay. All right. So, okay, Jennifer.
Oh yes, I just wanted to say that sometimes you will see the discount rate too as being
Hello.
quoted
Okay, I think
by
Jennifer's.
the
Jennifer,
central
I think
bank.
you should.
But then if hello,
Okay.
can you
Jennifer,
hear me
please
now?
take it again. Your line broke for a while.
Okay. I'm saying that the discount rate too, it may be different from what you see as being quoted by the central bank and what, let's say, the bank, let's say GCB will give you, because they also factor in their costs and all of that and their margins before they give you discount rates as well. Thank you.
Okay, great. So you have to verify. You may see it as one place, Bank of Ghana quoting something, but before the term we use is execute. Before you decide to do the action, buy or sell, you should confirm what rates you are looking at. All right. So like I said, we are going in a certain spectrum from safest investment or safest, not 100% safe, but kind of safest investment to less safe. But in doing that, there's this term in investments. I'm sure you've heard of it. The higher the risk, the higher the return. Would anyone like to explain this term for us as we consider taking on a little more risk? Please go ahead.
Okay, so I think nowadays people are modifying it to be the higher the risk, the higher the expected return. I think it, it means that as you move on from things that are less conservative and very risk free, you go into take on more risk, and more risk is, let's say, the probability that you will not get the promised or the expected gains in the future. So as you are taking on more risk, you need to be compensated for that extra risk you are taking. I want to give an example. So Elika mentioned the fact that the government can print more money to give you. They can also increase taxes to pay you if they don't have money. Jennifer doesn't have that power to do that. So if, let's say, I'm a corporate body and you bring me money as an investment, because I don't have that position to print money or do something, if my cash flows are not enough to pay you, the probability that I'll default will be high. So I am riskier than the government of Ghana. For you to bring your money to me and not the government of Ghana, I need to compensate you. So the higher the risk, the higher the compensation that I'll give you, and we call it risk premium. So the higher the return that I'll give you as compared to, let's say, the government of Ghana will give you for, let's say, an amount of money that you are going to invest. Yeah. And then, so there's a spectrum, very, very less risky and then most risky. Please, I hope that is fine. Elika, please, did you hear me?
Yes, yes, we got what you
Okay.
said. Yeah.
Thank you.
Okay. All right. And just to follow up on that, right? So risk is the likelihood that you may not get your money back, or no, the likelihood that what you intended may not happen. All right. So it happens in many ways. You give your money to someone, you won't get your money back at all. That's one hashtag men's code. The other is you give your money to someone, you expect return, they don't pay you any interest. You expect interest, they don't pay you any interest, they just give you your money back. That's another disappointment. Another one is they'll pay you interest, but not the full interest you were expecting, or they'll even pay you back your money, but not the full amount you were expecting, just a portion of it. Or um, they may delay paying it. They'll pay you back, but they delay paying it. All these are risk factors. The fact that what you planned is not what happened, right? So then take two scenarios to understand this uh, risk and return. Imagine you have two friends. Jennifer was talking about, I think, credit worthiness and stuff, right? But so let's look at it on a personal level. You have two friends. One has a very good job, comes from a very good home, you know, very comfortable, right? And oh, I didn't say Ram's name in case you're wondering. Yes, very good. Everything is going on well. And the person just says, Charlie, look, I just want to go to town. We are sitting in the office. I just want to go to town and come right now, but I'm short on cash. Can you please give me some 100 Ghana? You know that this person earns like 20,000 cedis a month, but she's just asking you for 100 Ghana to go to town and come back. There's not much risk in there. Person can just remove it from the back pocket for you by the time she comes back. And it's just a few hours. You don't have to worry. But imagine, Charlie, your man they hustle. Man they hustle for days. Maybe he has a job, but Charlie living the day-to-day life, Charlie, it's hard. Too many expenses, and it's borrowing from here and there. Everyone knows that Charlie, this person is borrowing. And the person says, "You please give me this money. I'll give it back to you in 3 months." Maybe it's 500 CDs or 1,000 CDs that this person is borrowing. You feel some way when you are comparing these two. Let's say the two of them are asking you at the same time. You are more likely to give it to the first person who you know that it will be more comfortable for the person to pay you back, but than this other person that you are not too sure. That's what we mean by risk. Whenever you get that feeling that will this person give my money back the way I want it, or you come and make me ask, then the person on top two will tell you, yeah, and someone who also eats. Why are you stressing me like that? When you think about these things, then you know that you've properly understood the concept of risk. All right. So even with the government, there are more risky investments before we get to the private sector. More risky with the government in terms of a longer duration. So it's, investing for a longer time than just 3 minutes, 6 minutes, it's 3 months, 6 months. So Sarah, would you like to tell us about that kind of investment? Hello, Sarah. You are muted if you are speaking. Okay, all right. Then I would speak on them then. These are bonds. We call them bonds. They run for um, usually more than a year. Let me just simplify it. There are different things. There are notes, some are 2 or 3, but for the sake of this simple conversation we are having, there's bills and there's bonds. Bills is less than 1 year. Bonds are longer. So the government may say, "Oh, please give me money, and let me take 6 years or 5 years or 3 years to pay you back. Would you be okay?" You say yes, then we'll call it a bond. Then you start scratching your head. Government, does that mean for 6 years you don't give me anything? Well, it's possible. We have some bonds, but they are not so common. We actually have one like that, but it's not very common. The norm is that for these bonds, what would happen is in 6 months, in every 6 months, they will pay you interest. So if the interest rate is 20% and you invested 1,000 CDs, in 6 months they'll pay you half of that 20%. That's 10%. So in 6 months you get 100 CDs. Then you can do what you want to do with the 100 CDs. You can reinvest it or you can go and chop it, but we encourage you to reinvest it. Then another 6 months. So let's say we start in January. So July, 6 months later, July, you get your 100 CDs. Next year, January, you get your 100 CDs. So go on now until if it's 3 years, and we are in 2022. So in 2025, January 2025, that's when it's maturing and they are supposed to give you your money back. So when they give you your money back, they'll pay the interest, the last interest, plus your full 1,000 cedis. So that's how those bonds work. Then with the bonds, there's if we said it's 3 years, but does that mean you have to wait 3 years before you get your money back? No. You can talk to a broker or however you bought it. If it's a bank you bought it through or it's a broker you bought it through, you can talk to them that, well, I can't stick around for the full 3 years or the full 5 years. So you sell it, sell the bond and give me my money. I know it sounds investment to resell it. Yes, it's the investment you are holding is like it's like a commodity. It's like an item. It's an asset that you can hold digitally. Let me put it that way. In the olden days, they were actually giving people a piece of paper as proof. That's where the terms notes came, and then the term coupon. So they cut a part of it, and then you present that part that's cut out. Anyway, no history lesson here. Pardon me. Okay, so you sell that investment to someone who is willing to buy. There are always people willing to buy. So you sell it, and then you get your money back. But sometimes you may not get the same money you invested back. Sometimes, if you put in 1,000 cedis, supposed to wait for 3 years, 1 year down the line, you need your money back. You may not get 1,000 cedis. Well, without getting too technical, it's possible that when you need your money, maybe you'll get 1,100 back, or you get 950, or you get 900. It depends on how interest rates are. I won't get too technical, but before you do that, just talk to the broker or the bank you are dealing with. Let them give you a sense of how much it will cost you, what it will take, and what you can get from it. All right. So yeah, that's it about bonds. Also, these are called treasury bonds. So you see, we have treasury bills less than 1 year or less. Then we have the treasury bonds more than 1 year, 2 years, 3 years. Last week, one was issued for 6 years, and the interest rates they'll be paying is 21.75%. That's quite a nice, comfortable interest rate. So yeah, these are government of Ghana treasury bonds for you. Anyone wants to say something? Oh, and I see a hand up. I see your hand up. I tried inviting you up, but it wasn't coming up. So I'll try again, and you can come up if you have a question or a comment to make. And to anyone, if you have a question, please feel free to raise your hand or send me a message in the chat, and I will call you or read out your question for you. Okay, so anyone wants to say anything else on the treasury bonds before we get to the private side?
I think you've said it. Oh, sorry, I had to step out a bit. I think you've highlighted everything. So just the example you gave about the 6 year that was issued last year. So if you had bought, say, 1,000 CDs, as you said, it was issued at 21.75%. So meaning that every year you'll be paid 217 CDs as interest, but this will be divided into two. So every 6 months you'll be getting 108 CDs. Every 6 months you'll be getting 108 CDs till the 6th year, when you are paid your last 108 CDs plus your thousand CDs. So yeah.
Great, thank you for that, Sarah. Okay, so now let's the bonds, you can also buy it with any bank or brokerage house. Just make sure that they are licensed financial institution. Okay, so now I'm sure your banks, you've probably heard of this term, bank fixed deposits, or you go to the bank and they'll say, oh, do a fixed deposit for us. Oh, we've not mentioned savings accounts so far. Let's see, Sarah, are savings accounts investments?
Nope. Savings, okay, to be savings are not investments because
They are not.
savings account is not an investment account. Because sometimes you realize that you even end up losing on your savings. The charges that even come on the savings account are higher than the the tiny interest that they send to you. So savings account is not an investment.
You heard it. Savings accounts are not
And
investments.
I just wanted to add to that. I
Please
remember
do.
I had some savings accounts I decided to put no money in. And it was just e charges till the money go finish.
I have a savings account that is in debit.
So the money got finished. And it reminds me of somebody I was talking about investment a long time ago. And he was saying that he left his money in a bank and he came and it was nothing. So, I mean, it was clearly a savings account. So, for me, I see savings account as dashing the bank money. So, if it's not money that you want to use in the short term, then it's not worth it keeping your money in the savings account. Because the bank is definitely going to use it to give loans and give you peanuts for it. Yeah.
I don't know if it's a good time to introduce the concept of inflation.
I think you
Elikem.
should. I think you should. Please go ahead.
Be- Yeah. So another thing is there is what we call inflation, which just to put in practical terms. So let's assume the price of milk. The if you had 100 cedis, the number of tins of milk you could probably purchase a year ago is different from how much you can purchase, how many you can purchase today. So, or even a ball of kinky. So that price, growth in price, that change in price is comes under the term of inflation. So what happens is if you keep your money in a savings account, it is that you put 100 cedis or 10 cedis in the savings account. The money is there. Meanwhile, the price of milk keeps going up. The price of, at the time you open the savings account and put your 10 cedis in there, the price of milk was 3 cedis. In a few months, the price of milk has gone to three cedis 50 pesos. In a year, the price of milk is about 4 cedis. Now, the same 10 cedis can probably only buy 1 tin of milk. Meanwhile, the time you put it there, it could have bought two. If you had invested the money, the 10 cedis could have earned you enough interest to ensure that you would buy more than 1 tin of milk. I don't know if that helps explain it.
Yes, yes, yes. Oh, in fact, even the wachi last week I was buying wachi, and the wachi seller has jollof. I didn't know she had jollof, so I said, "Oh, person me can watch jollof. I just want to taste the wachi and see if it's as good as the jollof and see if it's as good as your wachi." So I said, "You should just give me some 2 cities shit on kwan." The woman looked me dead in the eye and said, "Yenti 2 cities. We don't dish 2 cities. So you have to buy at least 3 cities or more." Meanwhile, last year, me and you were doing 2 cities business. My wife doesn't eat plenty, so I buy 2 cities I buy 3 cities for myself. Now she doesn't do 2 cities again. That's also another way you can feel the inflation. Okay, all right. So the import of us talking about inflation is when you are looking at what interest rate you should get. When a bank is saying that invest with us and you get a certain interest rate, one of the things you need to make sure that you are getting a higher return than is inflation. So recently, I think December inflation was 12.6%. So if you are doing an investment that is earning you less than 12.6%, that means you are losing value in your money. Your money will be losing value over time. So you need to make sure that you are always covering inflation so that your money will always be able to buy the same tin of milk that is able to buy at least. So that's how inflation helps us think about investments. Okay, so bank fixed deposits, right? I wouldn't beat the topic too much because the structure is similar to treasury bills, just that who you are giving the money to is different. This time, you are giving your money to a bank, and so we said yes. The higher the risk, the higher the return. The bank is supposed to, all things being equal, supposed to. I know some of the banks are giving lower returns, but let's say they are supposed to give you a higher return to make you want to not do a safer government of Ghana investment and give it to them. So in terms of risk, Uh, how does the giving your money to a bank, or let's say any, let me cluster them as one bank, um, non-bank financial institution, or perhaps even a microfinance, how is it different from giving your money to the government to do a treasury bill? Would anyone like to take that? Sarah, would you like to take? Okay, Jennifer flashed first. Or?
Yeah. So if you give your money to a banking institution, lumping all of them up, the difference is that now the risk is quite higher. So yeah, they're expected to give you better returns. But however, I've realized that for individuals, most of the time it is not like that, because sometimes your money is not so much to um come with attract better rates. Sometimes they have a limit as to the amount of money that you bring and then what interest it will attract. And for people that are starting life, usually your money will not be so big, so you'll get something lower. I want to give an example of a friend who um had wanted to go to a bank. So I won't mention the bank's name, but the bank gave him something even lesser than inflation. And I couldn't believe he had done it. Like, number one, it's a fixed deposit. Number two, it's not even up to a treasury bill. And it's even less than inflation. Like, how can you do that? But anyway, they are doing that. So you need to be able to understand that the person you are going to give, even though it has treasury bill capabilities, and then they'll probably tell you that they're going to invest their money in treasury bills or other things, it is not like that. And so they should compensate you better than somebody who can literally print money to pay you if they can't afford to give you money. Yeah, thank you.
Good point there. The Bible says, "For lack of knowledge, my people perish." So this person didn't know any better, and he went to the institution he or she felt he could trust, and they didn't give the person good enough returns. So it's something that we need to help people gain more of this knowledge. So I encourage you, if you are listening to this, just go on Twitter, search for Money Convos GH, follow us, share the stuff that we tweet, follow us on IG, on Facebook, listen to us on YouTube or any podcast. Just search for Money Convos and spread this knowledge, right? Let people know this, because if people are not getting enough return, they're shortfall, they'll come and borrow it from you, and we'll see whether they'll pay you back. That would be a risky investment to do, right? But yeah, let's get people to know these things. Let's get them to understand them and understand what they are doing, what they are doing when they put their monies in certain places, right? Speaking of education, just shout out to Zebrila in the audience. I mentioned at the top of the conversation that there was a tweet by Stats Ghana on the performance of certain stocks on the Ghana Stock Exchange. Farm milk at 270%, BOP at 133%. And it got people really interested in investing. So shout out to him for getting that done. Okay, so Sarah, do you also want to speak on the difference between the bank FDs, the NBFI FDs, and treasury bills?
I think just to add to what Jennifer said, it boils down to the risk return concept we talked about. It's high risk, high return. And when it comes to the banks and then the non-banks, you
Hi, Sarah.
microfinances and then commercial. Hi,
Hello?
Elikem.
Okay, you broke off
Yeah.
at, you said when it
Did you
comes
want to say
to,
something?
yeah, the line
With the
broke when you
micro.
said when it comes to, yeah.
Yeah. Okay. Is it better now?
Yes, I think it is.
Okay, sure. So as I was saying, unlike lending to government, which who is seen as more less riskier, in this case, when it comes to fixed deposit, it means that you're giving your money directly to these private institutions. You're giving it either to a bank, you're giving it either directly to the savings and loans for them to use for their operations, or a microfinance. So because these companies are riskier compared to government, you expect that they would compensate you better than the government will. So they will give you at least a spread over what government is offering you. So if government is offering 13% for a 6-month treasury bill, then the institution that you're going to, who is not government, should be willing to give you that 13% plus a margin, which is the risk premium. So if somebody gives you, assuming government is doing the 13%, and you go to an institution, the institution is giving you 20%, the risk margin, the risk premium there is 7%, meaning that the risk for doing that is perceived to be very high. So you have to know that this is a quite risky investment. So there is a probability of losing part of your interest or part of your principal or whatnot. So that's really it about it's the risk return concept. This is not, we've seen banks collapse in this country. We've seen microfinances. We've seen savings and loans go down. So that tells you that these are riskier institutions compared to government of Ghana. But the concept of the fixed deposit is just like the treasury bill. You give the money to them for a fixed period. So if it is 91 days, if it is 182 days, or if it is 361 year, you give it to them at the end of the period. They give you your principal plus the return that was promised you.
Wonderful. Good one there. I would speak a little about what we are talking about risk, but we don't want to scare you too much. So in a bit, I'll just talk about the structures we have that we should make you comfortable with giving your money as FDs to some of these institutions. But Mimi, you wanted to say something earlier.
Yeah, Jennifer mentioned that when your money is small, that's when this normally happens. But I think that when there's information asymmetry, or what I mean, people leverage of you not knowing to sell you products that may not serve your purpose. So I have somebody who had quite a lot of money. Elikem, I think I told you about this, but an investment was pushed down his throat, which will make him less than, if he had gone on his own or gotten an investment advisor to advise him. Sometimes the people you meet in the branch are not necessarily investment advisors. They are selling a product. So but they may not, even though they may be they may know that there's maybe a bond. Let me say, they may know that there's a government bond that can give you this figure. If their target for fixed deposits is so high, they'll end up selling you the fixed deposits so that they can meet their target. So it's very important that you ask questions before you settle on what you want to do, and always have your objective, your risk tolerance, and all those things at the back of your mind. If you need to, ask an investment advisor before you go ahead, that would also help.
Voila. If you need to ask an investment professional, an investment advisor, that would also help. I think you should do some due diligence, and I really wish when someone asks me about investments, I could give the person an answer that's one sentence answer. We said simple investment, but we've been talking for more than 1 hour, a little over an hour. It's not that simple, I know, but Charlie, you work very hard for this money, very hard. So you should also work very hard to protect it. It's not by default. People have different ways that they operate and different ways that they are trying to make profits. So you just need to protect yourself, or at least be well informed before you do certain investments, and seek advice of someone who is not trying to make a sale with you. Like Mimi said, you think they are not investment advisors, they are salespeople selling an investment to you. But talk to an investment professional and let the person give you a holistic conversation. It won't be a 2 minutes conversation, granted. It may be a bit 10 minutes. Try to understand some things, but please have the patience, and the patience will pay off. Trust me.
Elikem, yes, I just wanted to add one thing I've observed, which I heard on another platform, which I want to touch on, is a lot of the time when an investment professional wants to give you advice, they want to know your goals. and all that. A lot of people are not interested in that. They are just interested in what investment is there and how can I do it. And I think this is where we end up doing the wrong investment. So, just in case I forget to mention this in future sessions, please let's start getting used to sitting down to set goals, to think through what we really want out of life, and that's the best way we can get the best investment. Because all these products are good, but they may not be, a particular product may not be good for a particular purpose. So, I just wanted to add that.
Very good points, Mimi. Not every investment is good for everyone. We are all different. We all have different needs. Some Saram needed to put the money away for just 3 months while she waits and pays her school fees later. She was tearing trouble. I know, don't tell her mother. But yes, that was her need. If you don't mind, you can keep the money for a long time. Do that. What will help you, right? We've been talking about risk, but I said just to calm you down, what are some of the structures that we have to make sure that these institutions that you are putting your money in are not doing nefarious activities? I understand that yes, 2018, 2019, a lot of things happened. Licenses were lost, companies were closed down, financial institutions were closed down. But we are operating now with the understanding that the Bank of Ghana has cleaned the system. All right. So, what are some of the structures that the Bank of Ghana and the Securities and Exchange Commission have in place to protect you as you are putting your money with these institutions? Sarah, would you like to start? Oh,
Ali, can please give me a minute? I'll join you back soon.
okay, great. All right. Okay, so David would have also been a good person to answer this. He works with a securities regulator. So these institutions that I mentioned, Bank of Ghana, Securities and Exchange Commission, they serve as governmental agencies that watch the companies that play in a certain space. So Bank of Ghana, they supervise the banks. So the commercial banks, GCB, EcoBank, StanChart, Stanbic, Fidelity, Cal Bank, they supervise them. They send regular reports. They have stringent measures so that before you even get a license to do that kind of work, you have a lot of things in place. You need certain types of employees, like risk officers, the people on your ALCO, people who are very well qualified, and you have to pay them. Those kind of people, specialized knowledge, you have to pay them a pretty penny, you know. So make sure that all these structures are in place. Your technology is good. Your ATM machines can't be easily hacked. That kind of thing. They monitor all these things on an ongoing basis. They get reports, and if there's any trouble, they try to get ahead of it so that we avoid the situation of what happened in 2018. So that those are the banks. They are also supervised by the Bank of Ghana, are the savings and loans companies. So there's Easeway Loans. I think there are also finance houses. So Easeway, Bayport, Leseho, I think is it Dalex? I think Dalex is one. So those are other types of institutions regulated by the Bank of Ghana. There are microfinance institutions. They've got a bad rep, it's true, but some of them are doing very good work. Some of the microfinance institutions are doing very good work. Microfinance is finance for people with smaller amounts of money. So they are there to lend someone maybe 100 CDs, or they want to borrow 500 for you. Oh, borrow 500. You just go and talk to your brother or your sister or your neighbor. But for some of these people, 500 CDs, Charlie, they don't have anyone to help them get that money. So they have to go to a financial institution to get that money. So those are how the microfinance institutions. There are rural and community banks, and the Bank of Ghana also has this layer, the ARB Apex Bank, that also monitors the rural and community banks. And there are microcredit institutions in that space also who put in checks and make sure that things are going well. They don't go and deduct any money illegally from anyone's account. They audit all these systems. So yeah, while David looks available, David, as someone who works in a finance as a financial sector regulator, can you also mention a few of the structures that the regulators put in place to make sure that depositors' monies are protected?
Sure. So I know that we have all the financial institutions that do either banking or securities. They're all supposed to have insurance through the securities. What is it? SIPC, and it's actually something that they put on all their materials on their website. If you have that insurance, it's a badge of honor. And then we on the regulatory side, also make sure that all these institutions are very liquid in case anything is to happen. They have enough capital to at least pay all their depositors their money back. So it's something that it's very, very strict. Like there's no ifs, ands, and buts about it. It's a very, very strict thing, and all of them, either through the financial regulators or the SEC or the what's this new agency called? There's this other new agency too that they created not too long ago. Consumer Financial Something Protection Agency. All of them basically make sure that each of these institutions are inspected, their books are inspected on a regular basis, whether it's every year, every 6 months. They do that based on the size of the institution. So they kind of come in and then make sure that everything is, on par to just in case anything is to happen. You guys have all your compliance stuff. Everything is legit. So yeah, you can almost, unless the institution is not being regulated, and even that, it's hard to operate if you're not an institution that, it's hard for you to even get a license to operate in the first place, let alone be able to operate without being regulated.
Yep. A lot of hurdles to jump through to get that license. So yeah, these are some of the structures. Thank you, David, and especially this gives context to anyone who may be listening from the developed markets, from the US and Canada and Europe. Our big brother over there has given
All
us
the banks
a
have
good
the
lecture.
FDIC insurance, and you go on any US bank's website, you see it at the bottom there, FDIC or SIPC, or, even if they are regulated by an agency, they tend to put that on there as a badge of honor. Like that shows that we are a legit company. So, if they have that, they will not hesitate to plaster it all on their website.
Yeah, good one there. And in Ghana, we also have the Ghana Deposit Protection Corporation, and it's also provides some coverage for deposits in there. You can just Google it to know how much they cover in terms of people's deposits and protection. All right. Okay, so we've talked about the fixed deposit side, right? Now we are going to get into a little bit of the more interesting parts, and this is where so far we've been talking about, you may have heard this term, money markets, shorter term investments, money markets, right? We are going into the capital market side of things. Corporate bonds, private loans, shares, mutual funds, units trust. It gets a bit more exciting and and a higher potential to get higher return, right? So let's see. There's corporate bonds. I not too long ago I was explaining how the treasury bonds work. That's for government. So it's Would Saram, are you in a position to speak now?
Yeah, hello. Hi, Elikem. Yes, please.
Yes. So can you contrast the corporate bonds with the treasury bonds for us?
Okay, so largely the concept is similar, but in this case, you are lending to the private company. So we have companies that come, just as government comes to borrow, you have companies that come also to borrow from the public. So in this case, you are lending to the company and not government. So obviously that would come at some level of risk. And as a bond, it means that you are lending to the company for more than 1 year. So they would also give you, there's an interest rate that is quoted. It can be fixed or it can be what we call floating. So that it would be subject to other conditions. So when it is fixed, assuming a company comes to the market to borrow and comes to borrow, say 20,000, and is a 3-year bond, and government is borrowing 20,000 at say 18%. You don't expect the company to come and borrow 20,000 also from us at 18%. They have to compensate us higher than what government to incentivize us to bring the money to them and not give rather to government. So in that case, we will borrow to the company at a higher price, a higher rate. Yes, and the most of the bonds too, they pay coupons every 6 months. Similar structure to government. Some do pay annual, but mostly do every 6 months. They pay the coupon to you, and then at the end of the period, they give you your principal plus your last interest payment. Elikem.
Voila. You said opinion jari and nice. We finished doing the explanation, so I think it's a very good explanation. We can close now and go, and everyone can go and buy a corporate bond. Yes. Okay, great. So Jennifer, would you also like to say anything on the corporate bonds? They are not so common, are they?
No, so sometimes corporate bonds will have other things, embedded things that will, as Seram said, incentivize us to not send our monies elsewhere but send it to them. So apart from the um, let's say floating fixed and other differences, they can sometimes give you a sinking fund provision that is supposed to give you some assurance. Sorry, that's supposed to give you some assurance that they are putting in measures to pay you your principal later in life. So for instance, if let's say somebody Isway is a corporate institution, they are a private institution, and then they want money. So you see, Isway is in a business of giving out loans, and they need money to be able to give out these loans. So then they come to people and investors to seek for money. So let's say Easyway comes out and then I have some money that I want to go and give them, but then I'm jittery because they are a private company. There are some clauses that they can add that can make me happy and then say that I'm going to give it to them. So something like the sinking fund where they can decide that this is let's say a 10-year bond or a 5-year bond. But then I'll start to put some monies down in a sinking fund. Please, sorry. So a sinking fund is an account, or let's say a fund that you put in some money towards some time to use it in let's say for a future purpose. So when they create this sinking fund, then they are putting in the money little by little so that we all know what is going on, and then I can rest assured that they are not going to default with my money or something like that, and this will incentivize people to send them their money. The government of Ghana doesn't need to do that. So this is an example of, let's say, some of the features of the bond that can come up. Yeah, and I also want to go in a little deeper on the floating rates. Sometimes they have rates that are not fixed. Let's say a 10-year bond that will pay you coupon of 18.5% every year. They can tell you that I want to pay you coupon of, let's say, treasury bill plus 250 basis points, or let's say 0.25%. So then we all know when the treasury bill rates or the treasury bond rates that will be used is and then the spread that they'll add on it, that will use to do other things, like add on to the interest that they'll give to us. So these are all the things that can separate the corporate bond and from the government of Ghana bond, apart from the entity itself. Yeah. And
Great.
yes, so
Okay.
one last one, I want to say something. So you can I'll have to verify this, but then I read somewhere that you can't sue governments because they are protected as sovereign bodies. But then you can sue a private institution when they default on your payments. So yeah, that was another difference.
You can't sue government. Okay, there's something called judgment debt, but okay, all right. Okay, Sarah, you wanted to say something.
Yes, I just wanted to add that in our market, I don't know about the David's place, but in our market, corporate one difference again is corporate bonds are not as liquid compared to government of Ghana bonds. So, for instance, because they are not so common, and most people in Ghana would buy corporate bonds and hold it, is if you buy it and you want to sell it before maturity, it becomes sometimes very difficult to get a good price to sell it at, or even if to sell it at all. So, in terms of liquidity, the ability to quickly sell it and get your cash back, it's a bit difficult compared to that of the government bonds, which has a lot more people, which is a lot more liquid, because there are people always wanting to buy government bonds and always changing hands on them.
Yeah. So the government bonds are more liquid. That means you want to buy some, you find it easy. You have some and you want to sell it to get your cash. It's easy to get. More people are selling. So some examples of the corporate bonds, in case you didn't catch the names that were mentioned. Eastway has corporate bonds. AFB, or that's Leseo, has corporate bonds. Bayport has corporate bonds. There are some institutions that are quasi-government. So they are linked to the government. So we have ESLA, and ESLA is linked to a certain energy sector levy that is taken. So every a portion of our fuel, the fuel price, a portion of it goes to paying this tax. So there's this ESLA levy that is paid, and there's a bond linked to it. So as they are collecting the tax, they will use it to pay off this bond. Actually, I oversimplified it, but I oversimplified it. It's a bit more technical than that. It's not that they take the tax to pay a bond, but um, the tax was raised to pay off a certain debt, but they raised the bond to pay off those debts earlier and faster because they were more expensive. So now when the tax comes, they can direct there. So there's more assurance than a normal corporate debt in there. But all these are maybe names that were in terms that we are throwing out that you may not understand. Don't forget, you can start these investments now. How? Talk to your bank. Maybe your bank where you have your what's it called, your savings account and your current account may not be the best type of institution to talk to. So we will be coming to the next type of institution that you'll be talking to. The ones regulated by the Securities and Exchange Commission. You may have heard SEC, as Security or SEC, right? And these are the brokers, the fund managers, investment advisors, traders, mutual funds, unit trusts. These are some of the names that you may have heard. But to get these bonds, talk to any broker. Then the company names usually have brokerage in there. So there's Databank Brokerage Limited. There's IC Securities. So when you hear the term securities, don't think it's a security company. They're not going to protect anyone's building or house or bodyguard anyone. Another term for investments or financial investments is securities. So if you've not learned anything today, you know that it's not all securities that that wear boots. Anyway, so you talk to these brokers. Let's see any others. There's GFX brokers. Sarah, Jennifer, can you help me with more names of brokers?
Oh, there's Chapel Hill. There's Chapel Hill. There's Black Star Advisors.
Blackstar.
Black Star Brokerage. There
Fidelity.
is SAS. Yeah, there are a couple of them. You can just find the list on the SEC website. All the licensed brokers in good standing are there.
Great. Thank you, Sarah. Jennifer, you mentioned a few.
Stanbic, and then
Okay.
Fidelity. They are all there.
Okay.
Yeah.
Great. And Sarah mentioned that go to the website. Guys, I know you wish we would just tell you go here and you'll be fine. But no, that's not how investments work. Remember, you worked very hard to make this money. Don't let a little extra research make you lose your hard-earned money. Let's not do that. Take the time, visit these websites. Bank of Ghana is bog.gov.gh. That is BOG for Bank of Ghana .gov.gh .gov.gh. right? So, and then the SEC is sec.gov.gh. So sec.gov.gh. Go on these websites and just look for their list of institutions that they regulate, and they'll give you the list of the institutions who are of good standing. They are doing well. They are providing their reports on time. They are basically behaving well. So on the SEC website, right at the top, the menu there says licensees. On the Bank of Ghana website, let's see, what are the menus? Okay, at the top there's browse, and then there's supervision and regulation. All right, so on the Bank of Ghana website, there's browse at the top. You hover over it, and menu drops down, supervision and regulation. Go in there, look at the names. All right, don't just oh, Madam Food, my friend has opened a finance institution, come and invest. Oh, relax. Go to Bank of Ghana, go to Securities and Exchange Commission, those websites, and find out if it's legit. If you don't see the name there and you are still interested, ask them more questions, or ask someone who is more finance inclined, a professional. I don't mean to throw any shade on anyone, okay? But not everyone who works in a bank is a financial advisor, can give you good financial advice. Sometimes someone in a bank may be a bloody good accountant, but he may not necessarily be an investment professional. He can balance books very well. He can protect the bank against financial risk, but that person may not be an investment advisor. So just because someone works in a bank doesn't mean the person should be trusted. Should be not trusted, should be depended on for certain skills. You don't go to the mechanic for him to tell you about, it's about cars, but maybe his forte may not be paint jobs or certain parts of the cars. Everyone has their specialty. All right. Okay. So I mentioned that we're going to the interesting parts now, and it's kind of wrapping up towards the last few types of investments. The last one we'll do is Mimi's favorite, mutual funds. But before that, we reach the other end of the spectrum, shares, risky investments. Mimi, since you don't like risk, you are naturally not risk averse. You don't like taking risk so much. Would you like to tell us a little about shares?
Elikem, 2020 is a new 2020.
Okay, all right. Prove to us that it's a new year.
Yeah, so basically with shares, I mean, you want to be an owner of a company, but you don't want to start a company, or you're not interested in the all the wahala that comes with starting a company. You can own shares in a company. You can be a part owner in a company by buying shares in that company. It could either be private equity, that is for shares that are not listed on the stock exchange, which is mostly targeted more at high net worth people and corporate institutions, or you could buy shares on the Ghana Stock Exchange. I'm sure Elikem and Seiram and Jennifer, who work more with that on a day-to-day basis, will let you know how. So when it comes to shares, you can either benefit from dividend payment, which is a part of the profits that is declared by the company to be paid to its shareholders. Or you can also benefit from capital appreciation. So, for example, if I bought MTN shares for 1 cedi, and the next year it appreciates to 2 cedi, it means that if I sell it, like I've gotten double of what I bought. So those are the two ways that you can benefit from shares. I'm sure Edihem and the rest of the team will continue.
Good one there. Good, very, very good expose about shares investments. Okay, thank you, Mimi. Sarah, you want to add on more features and things to look out for with investment or with shares?
Yes. Hi. Okay. So as Mimi, 2022 is indeed a different year. Yeah, you're really spot on. So basically, shares, they as Mimi said, you are owning a part of, you become part owner of the company. But then it's also good to have a very long term look when it comes to shares, because the stock market, right, moves a lot more on information and sentiment. People panic easily. Something happened. Let's say you have put your money in MTN shares, and then MTN was declared MTN was declared, what was the term,
Significant market operator.
significant market operator. People heard that, probably based on sentiment or that information, they end up maybe selling a lot of their shares or going to buy MTN shares. It affects the price of the shares. So, or in our market, it's not our stock market is not as sensitive to information efficient as it should be. But yeah, so it moves on information and sentiment. So if you have a short term outlook and you invest in, say, you buy you bought fan, even let's use fan milk as an example. You bought fan milk at the beginning of the year. Right now, farm milk stocks have been declining a bit. So, and you want to sell now. If you panic and go and sell now, you would make a loss. But if you have a long term outlook, because the stock market, it's a cycle, it goes up and then it comes down. If you have a long term outlook, then you would realize that you actually reap yes, you actually meet your investment objectives. So it's also for people who can tolerate some level of risk. If you know that if you lose 10 CDs, it looks like you have lost 10 CDs today, your heart will do you kum. You don't go to the stock market. It is not for such people. It's for people who understand that, look, I'm taking risk for an expected return, and that over the long term, I am going to actually realize those returns. Yeah.
Ali, your heart will do you kum. You reminded me of a certain guy I knew when in uni together, and he came. I was in my early days of working. He came. I was like, "Oh, your finance house is coming. What kind of investment can I do?" And we talk about the potential of the equity-based investments, and go like, "Oh, okay, I like more money. I like more money, more returns." And I told him that you can lose some of your money. So if you bring 1,000 and next year you come in is 900 because we said long term, 5 years, 7 years. So don't worry, you short time there, you can manage. Then he said, like you people go hear from me over here. He will raise hell in the banking hall. Please calm down. Do treasury bills. Do money market mutual funds. Do something simple. If you will cause trouble when you see your money jumping up and down, calm down, sip some tea or drink some chilled water and do some simple investments. Equities is not where you should be playing. You understand? You know, this we are talking about how. Okay, let me pause this story and let's hear from Jennifer. Then I'll come back with the story.
Oh no. So no, please continue.
Okay, so you know how this farm milk thing. When I see people jubilating about farm milk, let me see if Isabella is still in there. When I see people jubilating about this farm milk, I hope they got in January 2021. Because those of us who got in like 2018, 2019, we bought it around 16%, 17%, and it fell to 1 CD. We lost 90 something percent of the value. We are still waiting, we are still waiting to recover. The few clients that we bought at those prices, 15 CDs, 14 CDs, and all that. We are still waiting to recover. So people are seeing 200%. There are some people are still in the red. We are yet to recover. But that's the thing about the stock market, right? So you would ask, can you time the market? But no, don't worry. We'll answer that question in a second. Jennifer.
Okay, so I have a story about the MTN IPO. So when MTN decided that it wanted to float some shares to the Ghanaian public and list on the Ghana Stock Exchange, a lot of people were excited. And also because you could buy it on Momo and everything. So that time I was working in Kumasi. So a group of people appeared. Some young men, I think they were students. They were very excited. They were coming to buy 1,000 shares each. And I was like, okay, how long are you looking to have the MTN shares? 3 months. Papa movement, and they will collect our money and go. I was like, and they were telling me, oh, they think it will rise, it will go up, double the price and everything. So I just let them understand that shares are long-term investments and they can go contrary to what you expect. So you don't just, let's say, have a perception in your head and you won't do any research, you won't do anything, and you just come and dump all your shares money there and then decide that you are good to go, especially for something short like 3 months. I think 3 months was a lot because 1 week saved, they would have gone to sell their shares. So yeah, shares are long-term investments.
Charlie, this MTN thing, people really suffered for it. MTN stock price has been volatile in some time past, and it's mainly because of this wrong perception people had about shares. They thought, oh, MTN, dear Charlie, good company, So you get in with the wrong mindset, and you see a very sad story, and you want to get out, and you have to sell off, like Seram said, sell off at a bad time, and that's when you actually lose money. See, you see your value going down, but you've not lost yet. You've not lost yet. You lose when you actually sell and get out, because while you still hold it, there's potential for it to recover. I say potential, not guarantee. There's potential. It may recover. It may come back up again, and you get your reward. And in fact, with time, you even hear that we would even advise when the price goes down, that's when you should even buy, right? So just possibly a last question on shares I'll ask is, yes, you say prices go up or down, prices go up and down, but why do prices go up and down? What makes prices go up and down? And how can I predict this? Can I even predict it at all? And anyone wants to take this? Oh, David, in fact, let's see. Let's hear from David on this one, then we'll hear from Sarah.
Some of the stocks and the prices the up and down trends are kind of cyclical, so you can it goes up for a while and then it kind of comes down, and then some too is just pure demand and supply. I think Sarah saying that, or was it you that said that in Ghana the stocks don't respond to news as much. Over here, the slightest news in the company can affect the stock price. Elon Musk goes to smoke some weed and says something about Dogecoin, and before you know, things are just going up or down, depending on where you stand. So, even news from a competitor. I remember back in the day when Samsung phones, the battery started burning for a while. People that had Apple stock, the prices were going up. Other competitors' prices were going up. So as far as what makes it go up and down, there's a whole bunch of things. Depending on the sector that you're in, some things affect the stock price more than others.
Yep. Certain things affect stock prices more than others. I liked what you said about Elon Musk. There's even this crypto with the name of his dog or something, and it's just going up and down like that.
Is it the Dogecoin or something?
No, it's not Dogecoin. Is it? Is it Fluffy? No,
there's a bunch of them, and I was reading that Dogecoin, or is it crypto in general, prices have dropped considerably lately. But
okay.
I mean, even
the
if you're
market is down. The market completely down.
Yeah, even if you're in stocks, man. I don't even look at it nowadays. I know LKB said, unless you sell, you've technically not necessarily lost money or made money. But yeah, when you have an account or you have some stock somewhere and you're looking at the price just dip and dip and dip and dip, and you see your account balance go down, sometimes it can be scary. So if you have a life savings, don't go put it into something extremely risky. If you're one of those people that if your stock price goes down by 1 peso, you're gonna call LK and be like, hey, Masa, what's happening. I'm about to jump off a bridge, so yeah.
Yeah, bro, how to be beating kum kum kum. Sarah, this time they will use it for you, pa. How to be beating kum kum. Okay, Sarah, how about you? You want to talk about the how prices go up and down?
I think, as David said, there are a number of reasons. Information, sometimes sentiment, and then demand and supply. So information, usually you find on our market that when, especially the financial stocks, that's the companies like EcoBank, GCB, Cowbank, the banking stocks, when they release their financials, you get, and depending on the performance of the companies, you see a lot of action on the market. Also boils down to demand and supply. If a lot of people are selling a particular stock, you realize, and people are not necessarily buying, you realize that the stock, because supply becomes more than demand, you realize that the price, so it's like tomatoes. When tomato is in season, the price is very low. But when tomato is scarce, is out of season, the price is high. So if they're selling a particular stock, you realize that the price is low. But when it's not in there, people are not selling it as much, the price goes up. So yeah, so information, um since people have just certain sentiments about certain stocks, those two can affect the price of the stock. I remember one of the days I realized that our market wasn't as responsive was when the former president, day he passed on, there was absolutely no activity on the stock market. Like there was
Please, I disagree. I
oh,
disagree.
you
The stock
think so?
market was boring. It was morning. Okay, please. The stock market was morning. Thank you.
Okay, so the stock market was morning, so nothing happened. And I was like, because if in other markets, I'm sure we would have. Because when David, when your former president was in power, he coughs here and the stock market is moving. He says this thing here and the market is on a different level here.
That guy was like a kid. He can just today he's talking to you, Serum, and you say something he doesn't like, and there's a company called Serum Incorporated. He go and be like, hey, that company, let's make sure we tax that company so bad it goes out of business. He doesn't care
Yeah.
if you are the CEO of Apple or whatever. If you piss him off, he'll get on the news and talk about how bad the company is. And somebody that powerful, I mean, it's not just the US, but everywhere people are listening to him,
Yeah.
and he has the power to do things that can drastically affect the companies and, their outlook. So yeah, boy, every time he starts talking, especially when he's ranting, you just watch the stock
You're
market and you
cautious.
see how it's like, yo,
Yeah.
this guy's about to make the market tank.
Wow. Yeah, so much power. Yeah. So just to add up, so because we were saying that the stock market is for long-term investors, if you are somebody who is so you usually would not recommend for someone who is probably near retirement. If you have 60, you're about 55, even 50, you don't take your life savings and go and put on the stock market, because by the time you are out of active employment, and if the stock market is down at the time, you end up losing out on your savings.
Yes, yes, yes. You need to have the time to recover from any losses, and therefore it's encouraged for younger people, those of us in our 20s and 30s. Let's do more shares investments. Okay, there's you can buy these shares, keep them over a long term. And the reason, and something to notice over time, of course, the past is no guarantee of the future. Past performance is no guarantee of the future. Granted, but it has demonstrated over the long term that if you can go conservative and do the treasury bill small, 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 91-day rollover, or 1 year rollover, you can do that too. But over time, we realize that if you go long enough, the shares usually outperform that. So you make higher return, but you don't just jump in and out. You just bide your time in there. There's this saying that the head of the Director General of Ghana's Securities and Exchange Commission, is known to say often. I don't know if he is the originator of the term, but he said, don't try to time the market. Spend time in the market. So don't try to say, okay, this stock has gone down, I'm getting in. And when it goes up, I'll go up, I'll get out. How will you know when it has gotten to the rock bottom? What if what you think that has gone down now the party is even getting started? It was at 10 cities. It got to 8 cities, so you think, okay, it's low enough. No. The party just got started. Hashtag farm milk 3-4 years ago. It will go down. It can go down to 1. You never know. That's the thing. You don't know. You think you are going to sell out. You bought it at 10 cities. It's gone to 13%, 15%. Oh, you made 50% profit. So you think you've got a good return. So you are at the peak. You are a sharp guy. You're coming to get out. Maybe not. You never know these things. So rather, buy stocks of good companies, sustainable companies that you know that they are doing good business. They have happy clients. And some of these things, they may be hard for you to tell. So talk to a professional. Talk to any of us upstage. Follow the club on Clubhouse. Follow us on Twitter, on Instagram, Facebook. Send us a message, and we'll engage with you to help you to determine what is a good company. For legal and regulatory reasons, this is not financial advice. It's just pointers, tips for you to start looking. We wish we could just tell you that this is it, go and buy this, go and buy that. But no, we need to discuss with you and understand what exactly works for you. So reach out to us and let's help you do that. I just say 2 last things on equity, on shares as investments. Then we go to the last part of it where we talk about mutual funds, right? Or in fact, it's not even about shares. I have a question from a member of the audience, and he's asking, what happens when a client passes away before his investment matures? So I even broaden it. Let's say you have an investment account with any investment house or any bank. What happens when you pass away? For this, let's see who would Jennifer, are you available? Would you like to take
I
this?
can take.
Okay, great. Sarah, please go ahead.
Okay, so depending on the type of, so in this case, if it's the fixed deposit or whatnot, so ideally when a family member passes away, if the person left a will, you go with the probate to the firm, and then they'll complete some forms, do some paperwork, and then the investment will be transferred into the designated account or estate account, and then it's taken from them. If the person didn't leave a will, when it comes to maybe I will pause and let me go to shares that I'm very familiar with. If the person didn't leave a will, then it means that you'd have to, and you don't have you'd have to go and do letters of administration. You appoint administrators. So you go to this commission of oaths, or you go to the courts, and then they will draft a letter. You appoint administrators. They do letters of administrators. So these administrators will now go to the institution and instruct the institution that they'll do the paperwork, obviously, and instruct that they should move the shares to maybe, or the investment into this account, a new account, maybe an estate account. And then from there, whatever decision is taken, whether it is sold or it is disinvested, it is done and then given to the family.
Good one there. Thank you, Sarah. So, main point is you need a will. If you don't have a will, please, you need a will, no matter your age, no matter whether it's just one rubber tie you have or they're clothes on your back. Just have a will. It's something simple. You can check online and see what works. Get someone to endorse it, and the Commissioner of Oaths, I think, or just look into it. Something simple, boilerplate language. All my money should go to this person. Else, if you lose guard, all your money will go to someone you don't like. Okay, David.
In Ghana, does the cost basis change based on the day the person died?
Day, as in whether it's Monday or Tuesday?
No, like let's say the person died on January 1st, right? Mm-hmm. Does the cost basis of everything they have in their account change at all?
Okay, I would I don't
Because I know
this.
here
We
if it's if you're inheriting an account of a deceased person, your new cost basis now becomes the prices as of the day of death.
yeah, I get what you're saying, David. But truth be told, in practice in Ghana, our enforcement hasn't reached that level.
Oh, okay.
It is coming. It is coming. As they are seeking more tax revenue, our enforcement hasn't reached that level. But there is a calculation. And perhaps we could have another conversation about this. So far, the people have experienced them having this kind of situation. What has happened is they said a percentage of they value the assets and then they charge a percentage. They say it's paid to the court, but I believe it's the taxes on it. But I would don't take this as a solid answer. We can have this conversation again, and we would bring a tax expert or an estate person or a lawyer to confirm what the costs are and the taxes are. Okay, all right. Maya, did you want to ask a question or contribute, or perhaps help us out with the answer to David's question?
Yeah, I just wanted to talk in terms of just the legal stuff with regards to the will and the letters of administration and stuff. We're talking about commission of oath, and I just want to say that as much as possible to go to an actual lawyer to get your will drafted or to apply for probate or letters of administration, because we have a lot of situations where people die and they think they have a valid will, only for it to come out that certain provisions that are actually supposed to be in a will to make it valid are not present. And so you have a will, but it's not valid because, let's say, the number of witnesses that are needed or signature or certain things are not present. So I just want to say that for those things, as much as possible, not to just go to commissioner for oaths or somewhere to do it. And then in terms of the estates, I don't know if you're talking about tax, but yes, we have estate tax that you have to pay in order to get the probate. I don't know if that was the exact question David was asking, but it's
Yes, it was
3%.
related. So yeah.
Yes, of the value of the estate. Yeah,
Oh, voila!
that's all I wanted to ask. Yes.
Thank you so much for
You're
clarifying.
welcome. Okay, bye.
Uh, okay, so yes, 3%, and also like Maya said, get a lawyer, guys. It's like we don't people don't like to pay for professionals, but Charlie, you will save yourself a world of trouble if you actually get a good professional on your side to make sure that everything is going on smoothly for you. Okay, so we are quickly running out of time. I didn't know it would be such an engaging conversation. An interesting one. Simple investments, but it's not just a one or two sentence and say, go and buy this. So I would so love to talk about mutual funds. The company I work for has the leading mutual funds in Ghana. I won't mention the name just yet, but I know this is Mimi loves collective investment schemes and mutual funds so much. So, Mimi, would you like to give us a bit of background, and then I'll share why I love mutual funds and I prefer them. Mimi?
Yeah, so I think I already spoke about what collective investment schemes are. Basically, it's a pool of funds. So let's assume um, we have 10 people, each bringing 100 CDs. We add it together and it becomes 10 times 100, like 1,000. Yeah, 1,000 Ghana CDs. So based on that, because we have 1,000, because we have a bigger amount, we may be able to diversify. Whereas if you just had your 100 CDs, you may just be able to buy just one security. With a mutual fund, because we are pooling our resources together, you are able to still benefit from diversification because the pool of funds how do I put it? We are able to pool together a certain amount of money and diversify. And normally, mutual funds will have their objective. So we have equity mutual funds, money market mutual funds, fixed income mutual funds, and even though we even have balance funds, which is a blend between equity and the fixed income. You realize that even if it's just fixed income securities, it's a number of them. It's not just one like treasury bill. It could be different treasury bill. It could be some different bonds, issues. So it could be different things. So you are not exposed to just one issue or just one asset. And I remember when, and that's how pension funds also are. So I remember when the banking sector thing happened, some of pension funds were invested in the banks, but because we had very little exposure to those banks and those monies were even eventually paid, it wasn't really much of an issue, and that's what you benefit from being part of a mutual fund. If you were doing it alone, all your money will go, let me say, I won't say will go down, but you may not get your money when you need it because you went in directly and you couldn't spread your risk. So these are some of the benefits of a mutual fund. Normally, it's also priced like shares are. And when you buy mutual funds, you sort of buy either units or shares. And so normally in the beginning of when the mutual fund begins, maybe a share or a unit or whatever could be one CD. As you see the mutual fund or the unit price go up, it means that your money is also increasing in value. So Elikem, I think I'm talking a lot. Um, yeah, basically, what I like about mutual funds is because it's a pool of funds and so many people are investing in it, you are able to do something very small. Some institutions take as low as 20 CDs, 50 CDs, 100 CDs, so that you can still be able to benefit from. Even though you bought one product, you are enjoying some small equity here, depending on the portfolio mix. You can be enjoying maybe some small equities here, some let me use pension funds, some private equities here, some corporate bonds, some what do you call it, municipal bonds. It's just 100 cities, but you are doing so much with that 100 cities. So that's what I like about the mutual funds. And also what I like is you don't really have to think about reinvestment. So unlike the treasury bills, or even the treasury, you can tell them to roll over. So okay, well, that's not really an issue, but here you don't really have to think about maturity period and all that. For the open-ended mutual fund, you can invest till that kingdom comes. So that's what I like about mutual funds.
Good one there. Good one there. You can invest till that kingdom come, and this is a good point. So far, some of the investments we've talked about before shares, all of them are principal plus your interest, and it will mature on a certain day, and you can roll over. But with mutual funds, the money is there and it just keeps growing and growing and growing, or going up and down depending on what type of investment it is. But you don't have to keep a constant eye on it. Like Mimi has mentioned a lot of the points that I also love about mutual funds. So what I'll just add is another reason why I like it is, so we've talked a lot about investments, but fact is, before I make an, so I'm a fund manager. I manage investments for high net worth individuals. Before I make any investment, I go through a lot of processes to determine what is the right investment. So I start from my investment universe. I know that it's Ghana that I'm investing in, or Africa. Then I use certain screens to determine what's a cutoff point for a good company. Then I take their financial statements. I take for the last 5 years or the last 7 years, and I don't just take the annual. I take quarterly also. Then I look at all these line items, revenue, expenses, blah blah blah, all these technicalities. Look, I do this on a daily basis. I do this for a living. While you are going about your business as a doctor or a lawyer doing something else, this is also my main business. All right. What are the odds that in your spare time you can do this as well as I do? I think the odds are not in your favor. I think maybe, perhaps. But hey, maybe look, yeah, awesome like that. I won't take that away from you. But what are the odds that the average person can use their spare time to match up to what Sayram and I do on a daily basis? What we are paid to do. What are the odds, right? So why not give these decisions to the professional? You pay a small fee to the person, 1%, 2% per annum, and they would manage your investments for you. You can do that by giving them the money in the form of a mutual fund, and they will invest on your behalf, and they'll be taking these good decisions. The mutual funds, they are protected because they are a separate company from any other institution. You are a shareholder, so you vote for the board of directors, and the board of directors would make the decisions on who to hire to manage it. Your money is protected. You have custodians. There are a whole lot of structures around mutual funds that also protect you. There's good corporate governance. They are supposed to publish their financials periodically. The unit trusts don't have to, but uh, but the mutual funds do because they are companies, and every year they have to publish. And they also, and with the mutual funds too, they don't pay taxes. So some of the investments, with who when you get dividends and you get interest on your corporate bonds, not the government of Ghana treasuries, but the private institution ones, you are charged 8% withholding tax. Of course, it's supposed to feed into your normal corporate tax, but a normal income tax. But I won't shake that table. But with the mutual funds, they are exempt from those taxes. So these are some of the extra benefits you get from that collective investment schemes, mutual funds, and unit trust. Before I get into where exactly you can go to buy them and shares, Sarah, do you have anything you want to add on mutual funds?
No, I think you have both said it all. So yeah, we
Oh,
can go ahead.
no, okay, fine. Then tell us where we can go and get some.
Also, so again, if you go to SEC dot before I go into that, the mutual funds, I think Mimi mentioned there are different types, largely fixed income. There's the balanced fund, there's the equity, and some money market one. So depending on your risk objective, your reason for wanting to invest, and then your risk appetite, you would there are so many options for you to go with. Usually the mutual fund, like the collective investment schemes, they are managed by fund managers by the Securities and Exchange Commission. You can go at sec.gov. We can mention, and you'd have a list of all the mutual funds there. I don't want Elikem to mention his company and a list of mutual funds, but yes, you'd have the number and other companies like Stanbic, Sims has mutual funds. Fidelity, has collective investment schemes. Fidelity Securities has collective investment schemes. Blackstar Advisors have collective investment schemes. Databank has collective investment schemes. Republic Bank has collective investment schemes. So all these schemes have different objectives, different motives. So you also have to, as I said, be certain about your reason for investing and then pick the right one for you. And a past performance, as we say, is no guarantee of future returns, but at least it gives you an indication of what you could expect from these funds.
Thank you, Sarah. Past performance is not an indication of, is not a guarantee of future returns, of future returns. Yes. Okay. So, all too soon, we have come to the end of our conversation. We've discussed from the safer end of the spectrum, treasury bills and bonds. Then we talked about bank fixed deposits, listed corporate debt. We talked about shares and then now mutual funds.
Please,
Maya, would you like
sorry,
to?
we didn't mention ETFs, although we don't have a lot.
Ah,
We don't have any in our market. So there are also ETFs, exchange traded funds, which come under the collective investment scheme. Currently, we only have one listed on the Ghana Stock Exchange that is tracking gold, physical gold. Very soon, we would have others tracking other things. So, yeah, ETFs are also there.
the way you're saying it is like you have something to
Yes,
say.
Medaisi BB so.
Okay. Watch this space. Thank you, Sarah. Okay, Maya, I see
Yeah,
your mic. Okay, you want to say something?
yes, please. I wanted to ask about the mutual funds. To find out how often you can get your returns on it. Is it like a quarterly thing or a monthly thing if you invest in the mutual funds?
They are so flexible. That's the beauty of the mutual funds. They are so flexible. Whenever you want your money, you just take a portion of it. They don't mature, so there's no set time when it comes to mutual funds. If in your mind you want to go and take your money, take some of your money monthly, that's fine. You can do that. If you want to take it every 3 months, quarterly, or every 6 months, you can go and take it. And a key thing you notice is your value will be increasing. So if you have in your mind that okay, you always you invest 10,000, you always let stay at least 10,000. When you come in a month's time, what is above it, you can take it. But of course, you sound young, and a lot of the people listening are young. And I'm saying as young as David, as who is 50, 55 thereabouts. I'm just pulling his legs. Anyway, I'll still encourage you to let your money grow. Leave your money in there to grow unless you absolutely need it. Yes, why not? Mimi, you also want to chip in?
Yes, we spoke about objective. So there are some mutual funds that even though there's no maturity date, they want you to keep the money in the account for a certain period. So maybe 2 years. So before that, if you should take your money, fine, they'll give it to you, but there may be a little penalty. So you need to have that at the back of your mind. Also, with mutual funds, there may also be front load charges. So when you put the money in the account, and there may be a little a charge. So it's not very wise to put money there and in 1 week or 2 weeks come for the money. So at least keep that in for a while. I wanted to add something, but I think it skipped me. But there are mutual funds that are for short term purposes. So for those ones, they wouldn't charge you even if you are coming for it after a week or two, because the purpose is for the short term. So know this before you choose a specific mutual fund.
Okay, thank you.
Oh, before
Oh
David
yes, sorry,
steps in, speaking of,
sorry, I've remembered. Yes, and Maya,
okay,
so with the mutual funds, some of them are the valuations are done daily, weekly, monthly. It depends on the institution. So what that means is if it's done daily, every day you see some value. If you should be checking your statement daily, every day you see some value on the funds. If you should be checking weekly and they do weekly valuation, sorry, you see some changes. Sorry about that.
Okay,
Mimi, I
nice.
don't
Thank
think you've
you.
deposited into his mutual fund this month. That's why he's
This is
agitating.
always funded.
Ish. Okay, David, you want to come in?
Yeah, I was going to say that there are some mutual funds that actually do pay dividends. So if that's also what you're interested in, you can get those types of dividends and you can stagger them. Some of them will pay it in the beginning of the month, some in the middle of the month, some at the end of the month. So if income is a goal of yours, then you could buy in that way and then stagger them so that every month maybe you're getting, I don't know, 100 cities or whatever amount based on how much you're buying every month. So you can also do that.
Great.
Okay.
David
Do we have
David
that
has
in
advanced
Ghana,
us.
or you're talking
Oh,
about?
Sorry. I should have prefaced my submission by saying
Actually,
depending. I don't know. Elikim and the and the rest can shed more light on that one. Sorry about that.
Yeah, that's fine.
actually, as Seram has something cooking up, my institution also has something cooking up. So yes, there would be a product like that very soon where you indicate how often you want to be paid and by what metrics, whether it's a fixed amount or it's an amount pegged to maybe your the returns that you make. So these things are coming up, and that's the beauty of our industry. There's innovation coming up, and we are taking advantage of technology. So watch this space. More things will be coming up, as David is talking about it in the developed countries. People are in Ghana also listening. Innovation. Let me go and bring something that's going on in a different country to bring it here. So we may not have it here right now, but check again in 6 months, and a licensed institution may just have it. Okay, all right. So I would just like to leave you with some action points. If you were to ask me, and you want a simple answer, I guess I would say do a mutual fund, right? But no, do some investigation, do some learning. Yeah, I know money convos, we don't give you the easy way out. It's true, but it's because we care a lot about you. You work too hard for your money, and we don't want you to lose it so easily. So do some investigation, ask some people, ask professionals for some advice, and once you've done your due diligence, go in for an investment that works for you. All right, it's like fingerprint. No two people are the same. So no two people have the same type of investment. Some may even have one person may have it 10% of this, while the other person has 5% of that. It's all varies. So get good advice. All right, and remember these ones are all simple ones. You can start now. First, you can start by asking your bank. You can check your mobile money menus to see if there's that option, or you can talk to the other SEC licensed institutions. They are not as popular as the banks because our monies are always sitting in our banks, but you can find out about them. There's one when we're talking about collective investment schemes, one I didn't mention. Shout out to Douglas in the audience. It's the EDC collective investment schemes. There's the balance fund, there's the income fund too. So you can look at all those options for these various companies. And some banks have investment companies linked. So you could ask about them and go to a reputable institution, one that you have confidence in, and ask about how you can start these investments now. Let's move from spending all our money to saving some of our money. And remember, saving is not enough. You have to move it from your savings account or wherever you are saving it, your mobile, and start investing. Let your money start working for you while you sleep. All right. Just a little housekeeping news. Book clubs. It's been months since we had last discussed a book. Last year we talked about we discussed Dumb Things Smart People Do with Their Money. Very interesting book. The Millionaire Next Door and The Richest Man in Babylon. This year we are resuming our book club, our book discussions, and we'll be having them on Mondays at 7 p.m. here on Clubhouse. We want them to be shorter sessions. The Thursday sessions we try to make it a conversation. So sometimes it goes beyond an hour and a half, 2 hours. That's fine. People can hop on and hop off. But with these book discussions, they'll be very pointed, and it's to encourage people to read a book. So we'll be coming up with a full book list for you, and we'll publish it on our social media. So just stay tuned. But we are starting with the month of February with the psychology of money. So Monday on our first session, we will introduce the psychology of money, and we will also talk about the other books on the list. We'll have the list of books for the first 5 months of the period. That will end the first half year. And then we'll propose other books, and we'll encourage our audience to vote and suggest the books for the next half of the year. So try to make it interactive and read what other people want to read. So we are starting with the psychology of money on Monday at 7 p.m. Do tune in here, set a notification if you can, and catch you here on Monday at 7 p.m. And we will also publish the upcoming conversations for the Thursday conversations. In case you joined late, it's always on Thursdays at 7 p.m. GMT. I hope to catch you soon and wish you a very wonderful weekend. All the best. Finish the week hard, make some money, save a lot. The month has ended. Please, please, please don't chop all the money. Save some for future you. Future you will be very happy that you did that. Thank you so much for listening and do take care.
Thank you too.
All right, good night.
Good night. Bye.
Bye.
Thank you for taking the time to listen to our thoughts. I hope you learned a thing or two and start practicing. Don't forget to follow us on Twitter, Instagram, Clubhouse and Facebook, and subscribe to our YouTube and podcast. Do tell a friend about Money Convos so we all become wealthy together. Talk to you soon. Bye.